if you want to start a business or you already started one and you're kind of thinking to yourself, why don't I just get an investor who will throw a bunch of money on my startup or my company and things will take off? Well, the reality is that not all businesses need an investors or capital fund, and some might not. So you really should figure out first if your business really does need an investor or not. In this video today, we're going to talk about if you really need to get an investor or if you can handle things without it, and what's the pros and cons of having an investor or doing it yourself. So speaking in general terms, usually there are certain types of businesses that need investors to get off the ground, to take off, and there are some businesses who don't. These usually fall into two categories, which are startups and real businesses. And by real businesses, I'm not referring to that startups are not. I'm just going to explain about it later on. But a real business is something that can turn a profit or earn money right from the start, and where a startup is usually an idea, a technology or software or something that you want to solve in the world and you're looking to earn money further down the line. And usually startups do need capital and investors right from the bat. I'm going to talk about it right now. All right, so let's break down three main reasons why startups actually do need to get an investor or fund capital right from the start. So number one, your idea is very good. You think you're going to change the world. You think you're going to solve a big problem. But in order to do that, you need capital, you need fund to develop the idea, and sometimes it could take a year or two or even more to build this idea that you have. Either it's a physical product or a software. Right, in recent years, everyone is developing softwares. So you know that you won't be able to produce any revenues or even profit for a year or maybe two. So you need to get an investor to get that idea you have out of your head and into the market. That's reason number one. Number two is that you already have something, you already have an MVP, you already have a product or a basic product. You already showed it to a few companies or a few people and it's sold. You show potential, you know it's going to work, people are interested, but you just don't have enough cash flow or you just don't know how to scale the business. Usually getting an investor, an experienced investor involved can help you scale your business big. And third reason is smart money. Smart money is a term when you don't just get someone to fund your project or startup, you actually get someone who has experience in your field that can help the company, that can help the startup grow beyond just funding it, right? Smart money is bringing a VC firm that already invested in similar companies to you or already invested, even better, in companies that might be your clients or might potentially even buy you eventually, and you have a nice exit. So that is smart money. That's the best type of investment to have, in my opinion, but that's another video altogether. So if you can get someone involved in your company that will bring both money and experience to the table, that is the best thing that you can do for your startup. And these were just a quick three main reasons why you should get an investor for your startup or business. All right, having said that, there are other business types or other reasons why you should not get an investor involved in your company, and let's break down the reasons. So number one, you already have revenues, you already turn a profit, right? Some businesses, what I call real business, are businesses that can potentially start earning revenues from day one or very quickly, and potentially can turn a profit very fast. These businesses usually don't really need investments, right? And they already make money and even some profit. What I would suggest is taking that profit and investing it back into the business to fuel growth. Now, these types of businesses already, because they already have revenues and maybe even profit, usually they can get really decent loans from banks or other institutions to help them fuel growth even further. Now, the benefit of getting a loan over an investor is that loans are cheaper. Now, you might say, wow, how do you say that loans are cheaper? Investors' money is like you don't have to give anything, right? Wrong. Investors' money is usually not cheap and is usually the most expensive option you have. I explain why. Because while with a traditional loan or a business loan, you pay interest on your money and basically you have to give back more than what you borrowed, the best thing about a business loan is that you can use that money to fuel your growth, and if you do it smartly and your product is good and you turn profit, you can return the loan slowly, and after a couple of years or even maybe less, you paid back the loan in full with a little interest, and you keep 100% of your company, and it helps you fuel your growth. With investors, they usually don't come cheap. When someone says, I like your idea, I think your startup is going to be a success, but right now I'm taking all the risk, I'm taking all the financial risk, I'm going to give you money, but in return I want equity. I want a big chunk of your company. And usually the first investors in a company, they don't come cheap. So at the end of the day, if the company succeeds, everybody wins, obviously, but the cost of that investment could be much more expensive than a business loan or any other type of loan. All right, the second reason why getting an investment or an investor on board to your startup is not a good idea is that not everyone is capable or even want to partner with someone else for their idea and business. Getting an investor is getting a partner, right? It just, some people say I only take his money, but I'm in control of my company. Well, that's true, but essentially in reality, when someone hands you their money, they become a partner in your company. And sometimes these relationships can go bad, they go south, they don't like what you're doing with their money, they have a change in heart, they don't like the direction that you're taking the company. They want to force you out. There are bad situations that can turn into lawsuits. And if everything's great, everyone is happy. But usually when things go bad, that's when you start appreciating or disliking the relationships that you have in your company. So getting an investor to invest money in your company is very similar to partnering with someone to help you run the company. Some investors really like to be hands-on and they like to tell you what to do or ask you a lot of questions and really monitor your every step, and you might not like that. You might say to yourself, this is really bad. I'm not in the business. This is my company. Why is he telling me what to do? Well, he gave you a lot of money, so he thinks it's his right. So there are a lot of things that go into this relationship between a startup entrepreneur or founder and an investor, and you should carefully consider these aspects before you sign that dotted line and getting that check. All right, the third reason why you might not want to get an investor for your business is that you just want the money. Okay, so let's say this is a really bad idea. Let's say you have an idea that you think is good, it's not proven, it's not tested. You want to get an investor just for the sake of having enough money to continue. This is a bad idea, because if you haven't tested your theory yet, your idea yet, you don't know if you can turn a profit, you don't know if you can generate revenues. Just getting money for the money's sake is not a good idea, because you risk potentially losing someone else's money, and it can really turn south really fast. Usually solid, experienced investors will understand this, won't give you a check, won't invest in your company. Usually a lot of investors and a lot of seasoned entrepreneurs, I'm sure, can relate to this, will tell you, come back to me when you have something to show. Maybe 1 or 2 clients that are interested in your idea. something, an MVP, a viable product that you've built, something that can show me, the investor, that this is a good idea to invest in. If you have nothing and you just want money to get money, usually experienced investors will not invest in your company. And honestly, even if you find someone that will, you shouldn't take their money because it's prone to failure. You should test, you should bootstrap, you should test your idea first, and then when you have something to show, contact investors and show them that your idea has a much higher chance of success. All right, so having gone through 3 points for the pro and 3 points for the con, what's my take on should you get an investor for your business or company or not? My take is it depends, and I know it's an annoying answer, but that's my response. You should think carefully about the business type, about the company type, about the industry that you're in before you decide if you want to partner with an investor or get their money. This is not an easy question to ask. Obviously, there are many other reasons for pro or con. I only highlighted a few for each for the sake of this video. This is a topic that actually can be a series of videos, and maybe it will if you liked it. Also, if you are an entrepreneur or you started business, hit me up in the comments telling me what's your take, investor or not. Also, make sure you subscribe to my channel, give me the thumbs up so I'll know I'm doing something right. And as always, I'll see you in the next video.